Fade the rally because the bear is coming back. I'm your host, Steve Van Metre, and thanks for joining me today. And while retail investors, money managers, and hedge funds cram back into stocks, the charts are saying maybe time to get out. Let's go to Bloomberg, where we start today's story, and it headlines as out of the woods, the S&P 500 recovers 50% of the year's drawdowns. That's a perfect 50% retracement from the peak to trough in this cycle, and that's important because it tends to delineate the difference between a bear market rally and the start of a bull run. And that's going to get a lot more believers in, and sure enough, it will. Meanwhile, the bears remain skeptical about the duration of the rally, as prior 50% retracements in 1974, 2001, and 2009 saw downturns shortly after reaching the threshold, according to a chief market technician who said that a resurgence in commodity prices and weakening bonds looms over positive measures. And that's the story for the day, is when we look at the charts, is the bear market actually still a bear market? Are we out? Are we back in a bull market, or is this just a big bear market rally that's going to head lower? Well, let's take a look at momentum. We'll dig into the charts and see where things are headed. Let's start out by looking at the S&P 500. Momentum is positive. We're looking at the relative strength indicator, a momentum indicator, to 72. Now, when we get to 70, it's an overbought condition. We see the MACD has still a positive cross, but is way off the charts. It's also overbought. Back in on July 27th, actually, Momentum Time Pro flagged its golden cross, said buy it open at 394.36. With Friday's close, you're up at 427.10. Last week, you may remember, we identified upside target of 427 to 428. It's running 33 consecutive days of buy signals. It's maxed out on the monthly. The 3-month window is up to mid-size, and the 6-month now at a minimum position. But when we look at momentum, we've seen it timing out here. So we'll first go take a look at the charts and look at history, because I think it's a good guide to look at other bear market rallies and see, hey, is this really the real deal? Are we in a bull market, or is this headed lower? All right, let's take a look at the SPY here. We're on a 2-year chart. We've got the volume profile turned on. Down here, we've got the RSI. You can barely see it, but it is in overbought territory. We look at the MACD over the last 2 years. It's way high up there, suggesting that it too is in overbought territory. But let's look at the charts, because what did we talk about before? That it needed to rally up through some supply zones, and it did. And so we have a positive cross to the 21-day moving average here, this red line, positive cross to the 50-day, and now it even went through the 100-day moving average as it's racing up here to the 200-day moving average, which is turning down. You've got 2-year volume support up here. Now, what does this mean? Well, most investors bought in up here. I know it's hard to believe, but many people bought the top of this market and are now looking to double down their bets in hopes that we get to new highs. But is this thing about to fizzle out? Well, looking just at the volume here, we've got a little bit more upside before we get right into where this 200-day moving average is at, and that's where I want to show you this is likely to stop. Because let's go out to the weekly chart for a brief moment. And what do we see on the weekly? Well, we see down here the MACD went from really oversold conditions, really low conditions, rallying up. We see on the weekly the RSI was in oversold conditions. But let's go back to same time of areas, looking at the last 2 bear markets, and we can see they rallied up here in the great financial crisis, and the RSI got to right about 53-ish on the weekly. Now let's go back to the .com bubble here, and we can see right in here we get a big drop in the RSI, and it comes up to right around the 52 to 53 level. Where are we at here? 54.8. So that's the first indicator I want to show you, that perhaps on the RSI and the MACD, we are seeing, particularly on the RSI, we're seeing a point where it is indeed, going to start slowing down. Now let's go back to the charts and look at what happened back then, because it's very important to see that if you're trading this, that maybe you need to be kind of watching the downside. All right, let's take a look here first at the great financial crisis. Notice you have a top forming, and then of course the market's coming down. You get a double bottom, kind of looks familiar here, and you get this big rally up here, and it hangs out for a little while. So you notice it just doesn't disappear right away. It hangs out for a little bit and then comes plunging down, a little bit of rally, and then a bigger plunge. So keep in mind, now what I want you to notice here is, see that tan line? Well, there's your 200-day moving average. So that's why I said prices are looking like they're making a run right up to 21-day moving average, which they did, tagged the 200-day moving average, and then fell off. Now let's go back even further here to the dot-com bubble, and not as pretty of a top as before. It's a much bigger top as sellers were emerging in here, and then all of a sudden you get a price decline, a rally up to the 100-day moving average, a bigger drop, and a rally back, and it doesn't quite even get to the 200-day moving average. And so you see even in the early phase, it just tags it here and comes back down. So both cases, the 200-day moving average, at least from this point, and kind of not really that close to here, but as close as anything else, acted as a point of resistance, suggesting the market's going to head even lower from here. And it makes sense, of course, with the Fed tightening, that this is inevitable. All right, let's go on to the next chart. Let's look at tech stocks, because what do we see with tech? Well, that's not what we want. Boy, that was the wrong one. How about there, as we get this thing on, clicking on the wrong thing? And what do we see here? Identified that golden signal on 727 thanks to Momentum Timer Pro. Had to buy it open at $2.99. Friday's close at $3.30. We identified last week the upside target at $3.30, $3.31. And what are we saying right now? We see RSI at 67.7, almost overbought. MACD is indeed overbought. And of course, what does that tell us? That it too is kind of running out of steam. And notice that it's a ways off its 200-day moving average. If we zoom in a little bit, it's a little easier to see. But it had that, broke through that 2-year volume profile line. Where does this run out of steam? Well, maybe a little bit higher. You could maybe get even in this little supply zone up here at 340. So I don't think there's a ton of upside here, but we'll see where it tops out. We've noticed that the point where it is today has been an area where it has run into resistance. And what do you see? Of course, the RSI is getting up there at oversold territory. The MACD getting up there as well. So kind of telling you that maybe the rally in stocks is getting stretched. And how about the bond market? You know, we've talked about, breaking support here. Whereas we look at 10-year Treasury yields, it's not uncommon that the first break of support gets sold. And sure enough, it got sold up here. And now we'll expect this to kind of fade this higher move in yields and come down. And the next time it breaks support, it heads all the way lower. Let's take a look at bonds. See what Momentum Timer Pro thinks. Momentum now negative. The RSI is at 47. MACD has a negative cross, so the RSI is the only thing holding this up. We see Momentum Timer Pro flipping to a midpoint on 727. Had to buy it open at 114.91. Would have been stopped out on Thursday with Friday's close, now at 115.55. So depending on if you traded this or not, may have a small loss. Next upside target still at 119 to 120. Remember, we identified that last week this had a 114 to 115 downside target, and it got there, and I forgot to update this, but there's been a couple of sell signals in a row. So maybe if you're looking at bonds here thinking there's some upside, wait till this flips back to a buy signal. How about, well, you know what we should look at is the chart, because this is kind of a beautiful chart we're seeing here. Let's go into the 6-month window. And what do you see? A left shoulder, a head, a right shoulder, inverse head and shoulder pattern. And sellers came down right to a point where buyers have been. So you see sellers are dominated right up here. I'll zoom in a little bit. You can see that on the 30-day window. You can see a left shoulder, head, right shoulder pattern here. Sellers where that volume profile line is. So sellers aggressively up here drove price down. Buyers were waiting where they have been buying. So all it takes now is you want to look at where the break point, the neckline is. It's at 119. You break that, you're quickly moving up to 124. And then from there, the bull market and bonds is back on, and you can see volume profile over the last 6 months, very heavy here, right at 115, right where we know buyers are at. All right, let's take a look at gold. Momentum remains positive. RSI is at 60. It's just a nice number. We have still a positive cross on the MACD. How about Momentum Timer Pro? Flagged this golden signal on 812, so that would have been just the other day. Buy it open at 163. Of course, Friday's closing at 167. It's 87. Now remember, this buy it open wasn't on 812. We flagged this signal in a previous show. It just got stronger. Upside target now to 167. So I don't think it's got a ton of upside left here. I just flagged that was where we got to last time, with the next upside target of 171 to 172. Let's take a look at GLD here and see where that goes. You notice we hit a target. The next target, look at this volume profile, is right up in here. There's a little bit around 170, a little bit thicker volume, popping out 172. Let's look at gold futures, and you can see that would put that around 1832 as potentially the end. But notably, we've seen every time it gets this 1800 to 1820 range, that sellers are come out here and drive that back down. So keep an eye out for that. Let's look at our trade of the week. Last week, we had Mexico EWW identified as signal on 8-4, the golden signal. I had a buy it open at 45.70. Friday's close at 48.66. So you're up. Next side upside target is still a little bit higher. Downside target is around 45. Momentum is definitely positive on that one. Let's take a quick look at EWW, and here we see it. Looking at that 6-month volume profile, beautiful volume profile support below us. Upside target is just a little bit right into here, 49 to that 50 range. And let's zoom out to the 1-year chart. You can see that resistance is right here at 50.45. So sellers have been right up there. Potential run up to that. Mind the 200-day moving average there, headed lower. All right, let's take a look at our trade of the week. Don't want to end our show without that. How about Latin America? 40. Momentum went from positive. It's now overbought, but that isn't a big deal for Latin American stocks. MACD's got a positive cross. The 1 month flipped to a minimum on the Momentum Timer Pro. By the way, if you're wondering what this Momentum Timer Pro is, it's a formula-based momentum screener. There's a link in the description below. I'll put one up here in the corner as well. Sign up for limited time. It's free, and some very cool things are coming with it because I hired a programmer. So that's even more exciting. Buy it open at 24.62. Friday close, it's up at 25.83. Next upside target is 26 to 27. Let's take a look at where that is. 26 to 27. Where are you? ILF. Here you are. And why is that? Because there's your 1-year volume profile up there, 26.54. Make a nice move here, and then I would look to fade that. And why would I look to fade it? Because it looks like, as you zoom out, that it's still kind of broadly in a downtrend. So it's just making a nice little counter trend rally up into a little bit higher. But hey, how about that for a nice little trade if you're looking for that kind of thing? Momentum Timer Pro's got all kinds of signals, short-term, intermediate, and long-term signals. I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.